Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So, with every one of the asset classes, and some of the things that I always talk about when I do these webinars and in my classes too, is I just never understood and I never could understand why one person could be one kind of a trader and totally dismiss the other kind of trading. What I'm speaking about, of course, is fundamental analysis and technical analysis. And fundamental analysis, the thing about it is assets do have values. They're based on different metrics. And a lot of times, though, the sentiment of the traders is not going to reflect the true value of the asset. For example, somebody could find out about a biotech company just by doing some research. I did it many, many years ago. I found out about a biotech company that was making monoclonal antibodies. And because I was doing my homework and doing my fundamentals, I found out about their story. And that was literally a stock that went from under $1 to over $50. Actually split a couple of times on top of it and released a spinoff of another company with another division. These are back in the bubble days. But I did all that based on fundamentals. And when I first started, that's all I understood. However, I made quite a bit of money in the 2000 stock bubble, as I tell everybody every time I talk about these presentations, but I gave most of it back because I didn't have any idea about technical analysis. And if I would have just understood simple things like who's in charge of the market and how can I use a chart to see who's in charge of the market, what are the emotions of the traders that are trading these products all over the world, I would have been able to hold on to more of my money. But you learn by making mistakes. That's how you learn. So instead of just saying, oh, I had bad luck or this and that, I just decided to educate myself in how to use charts, how to use simple tools, very, very simple tools, to keep my money. So I learned technical analysis combined with fundamental analysis, and that's what we strive to teach all our students. And again, here we're talking about a specific asset that is great for protection. It's great for speculation. It's great to be able to take positions with very, very low cash outlays. But some other assets might be better for holding for longer periods of time. Options don't, they don't last forever. They have a finite life. Okay, so if you educate yourself on each one of the asset classes, you'll learn which ones are better for investing, which ones are better for trading, which ones are better for protection, etc. So it's always good to just keep learning, folks. Somebody once told me, I think it was my grandfather, rest his soul, he said, I never stopped learning up until I stopped learning, and that's good advice. Okay. Once you take one of our courses on site, you have a basic understanding of what we call the core concepts of trading. And that's just pretty much understanding how the pieces fit together. But believe me, it's just the beginning. The next step is actually to write out a comprehensive trading plan. This will be your guide to tell you what to do. Pretty much the airline pilot example is the best one that I could give about that. Thank goodness those guys actually write out some kind of a plan. They have some kind of a checklist before they take off. Because I'm sitting in one of those planes, and I'm surely hoping that they'll do that. Okay, and when you get into a trading situation, when you get nervous, when you're trading, and your emotions take over, and adrenaline is pumping, if you don't have a well thought out plan on what to do, you'll end up freezing up like a deer in the headlights. And so it's always a good idea to have a battle plan. Each one of our students' trading plans is personal. It's based on how much time they have available to trade, how much capital they have to start, what type of trader they want to be, and we're going to cover these three types today: swing, position, and active trading a little bit. And again, so each one of the students' trading plans is very, very personal to themselves. And right from the get-go, whether you plan on just helping yourself along part-time or full-time, if you treat this as a business, if you really go go for it from the beginning as thinking about it as a business, running it as a business, making a business plan in addition to your trading plan. You'll be much, much better off going forward. All right. Now, today's presentation is going to be about trading ranges, but before we start on that, something that I've noticed from working with students over the years that I've been doing it is when you mix all the different styles of trading together, when you mix position trading with swing trading and short-term trading, you'll end up with violating rules that are applicable to each one of the different styles. And again, everything you hear me talking about was learned from really just learning it from the market, staying with the market, learning to trade the way I trade, learning the rules that were comfortable for my particular style of trading. And when I first started trading, I was very, very active and wanted to be very, very active. And as I've gone along in my trading, I've moved more away from short-term active trading into longer-term position and swing trading. Okay, so once you understand the specific rules for each style of trading that's out there, okay, it's also important to understand the rules for the other styles of trading so as not to confuse the different styles. You'll end up all of a sudden saying to yourself, well, I'm going to buy this call option, and the position starts to go against you, and you intended it to be a short-term trade. You were trading it because of volatility. You were trading it because of hedging market risk, and all of a sudden you end up with it as a position. And you'll rationalize that to yourself. You'll say, well, I'll just hold on to it. And a lot of people do that. They do that with stocks all the time. They start off trading in an earnings report or something, and all of a sudden they end up holding the stock for long periods of time and justifying why it should be that way. Well, it's impossible really for us to teach all of the information that we have to share with people in the 7-day or 6-day class. So the Online Trading Academy offers the benefit of giving the student the ability to retake the class any place they want at any of our facilities for free all over the world. And we do have students that like to follow instructors around or travel when it's warm or whatever and take their families on vacations to different parts of the world and then retake the classes. We also have our extended learning program, which is an electronic program where we meet 4 times a week in a classroom situation for a couple hours a day on each of the different asset classes. And we have beginning programs for that series, and we also now have master programs and a lot of things coming down the road. Okay, and now in those classes we get a chance to work with people on individual styles of trading: intraday, active trading, position, or swing.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.